Good afternoon, everyone. Thank you for tuning in to Protecting Paradise, ensuring your condo's future amidst rising insurance rates and coverage requirements. That's a mouthful, huh? We've muted all participants' devices to eliminate the background noise so everyone can hear clearly. Feel free to submit your questions. One second, I want to put this up. Feel free to submit your questions at any time by navigating to the Q&A option on the toolbar. Instructions on how to submit questions are being displayed on the screen. Also, please note that this webinar is being recorded and will be uploaded to our Castle Group website at castlegroup.com. Thank you again for tuning into today's webinar. We have a legal disclaimer, which is displayed on the screen. Alessandra, do you want to provide the legal disclaimer?
Sure. So I'm just going to go ahead and read this for everyone. The information contained in this webinar is for informational purposes only and is not legal advice or substitute for legal counsel. The information contained in this webinar may or may not reflect the most current legal developments. Accordingly, information in this webinar is not promised or guaranteed to be correct or complete and should not be relied upon as such, as legal advice must be tailored to the specific circumstances of each case and each association. Nothing provided on this webinar should be used as a substitute for the advice of competent counsel. The materials on this webinar do not constitute legal advice.
Thank you, Alessandra. Now we get to the fun stuff, right? Well, my name is Millie Ventura. I'm the Castle Business Development Manager for the Palm Beach region, Martin County, and India River County. Castle has over 500 communities in the state of Florida and Texas. We've been in business for over 40 years, so I feel pretty confident calling ourselves industry experts. A little bit about myself. I've been in property management for over 25 years and with Castle for 5. I'm from Chicago. I'm a native to Chicago, and I moved to Paradise about 5 years ago. Jerry?
Thank you, Millie. Much like Millie, I handle property management and business development for Broward County at Firth Castle. I've been with Castle for 7 years and change. It's been going very quick. And one thing that sets us apart from some of our competitors out there is our layered support and attention to detail. We really want to support all of the managers that we have and allow them to focus on the really important responsibilities of managing your association and less on some of the administrative burden. So that's some of the strategies that we have. But the best thing about being with Castle is we get to work with some of these wonderful vendors, and Ben and Alessandra for sure top the list. And if Millie, if you could put the next slide on with everyone's cute faces except for mine. Alessandra, you want to go ahead and do a little kickoff about yourself?
Sure. Thank you, Jerry and Millie. My name is Alessandra Stivelman. I'm a partner and shareholder at Eisinger Law. I am board certified in condominium and plan development law. So representing HOAs and condos it's essentially what I do 99% of my time. And this is what my practice revolves around. Our office is located in Hollywood with satellite offices throughout the state, and we service the entire state of Florida. And education is really big for us. We understand that board members are volunteers. So we're always looking for opportunities to educate, and we love partnering up with Castle and other vendors to do this. So I'm really happy to be here and looking forward to the discussion on insurance. Thank you.
All right, hi everybody. I'm Ben Myers here with Insurance Office of America. We are a Florida-based agency. I'm here in the Boca Raton office, and we are condo specialists. We do over 500 condominium associations for insurance. I grew up here. I know this area like the back of my hand. And really to start this out, we know that this is not everybody's favorite topic. But what I can tell you, and I think I probably speak on behalf of all insurance agents, including my competitors, we really look forward to bringing you some better news. That is near. This is painful for everybody, and I hope to bring you a little bit of good news today. But I think there's more to come in the coming years. This won't always be the way it is today. So looking forward to providing some advice on how to navigate this, and then hopefully there are better times ahead for us all.
Thank you, Ben. Just want to remind everyone also that you can chat in your questions. This really is going to be more of a Q&A format today. We're not doing slides as some other webinars do. We want to really answer as many questions as possible. Many of you submitted questions ahead of time. We thank you for that. So between those and the ones you do chat in, we're going to do our best to get to as many questions as possible. But if we can't get to all of them, we'll do our best to stay in touch via email, and we'll put our contact information on the screen at the very end as well, so you can reach out to us directly. But a lot of times with insurance, it's a lot of bad news, as Ben mentioned, and it's not Ben's fault. He's a nice guy, but we're going to hit him right now. Go right to it, Ben. So the number one question everyone's asking: what's affecting the rates? Why are they so high? And what strategies can boards do to try to eliminate some of that high cost?
Well, it's, the kind of cold answer is that it's a market like anything, supply and demand. There are fewer carriers willing to offer coverage. Having said that, markets all have cycles, and we've been in this cycle now where rates have been going up for most of the associations now for 5 years or so at the very least. About 10 years ago, the cycle changed. 10 years ago, most of us here were Citizens, and very rapidly rates went down. There was more selection, and there was a nice period of time there. That will happen again. There are big movers and shakers that are within people's control. I've saw a lot of questions beforehand on roofs, impact windows. I mean, those are huge. The newer the building, the newer the components of the building, the better. And then there are things that are outside of our control. For the first time ever, the legislature, or that I can recall, I should say, the legislature actually did something helpful with tort reform this past year. For everybody here, you have property premium, you have liability premium. You're getting hit with both. Liability is only 20% of your premium, but the state legislature made it so that the liability exposure for everybody, all condo owners, is much less. So if 20% of your premium is now flat, that helps. But there's things that we can do, there's things we can't do. But both of those should be able to move in our favor, because this market's going to cool down sooner rather than later. I think you're muted there, Jerry.
Another key thing to keep in mind is to just be proactive, right? It's going to be unfortunate news when you're finding out about your insurance rates, most likely, but find an agent like Ben who's going to be communicating to you throughout the process and not waiting until the last minute because they're scared to give the news you don't want to hear. These guys are professional. They're going to do their best to keep working it. And again, with a great law firm like Eisinger and Alessandra, her team there can definitely offer some support. And Alessandra, do you want to talk a little bit about some of the things you can do or questions you're getting from boards in relating to some of the insurance concerns?
Yeah, a lot of chaos, a lot of panic, unfortunately. A lot of boards that are hit with huge premiums and weren't expecting it, which is kind of what we're seeing all over the state. Unfortunately, we can't, go backwards and plan in advance, but what we're seeing is the need to specially assess, to look into loans. You have to make sure you look at your governing documents to make sure the board has the authority to do that without membership approval, as far as specially assessing to pay the premium. I'm getting a lot of inquiries as to what insurance is required. What am I really required to have? Well, do I have to have wind coverage? Do I have to have flood insurance? And at the end of the day, the statute refers to adequate insurance, and your governing documents may be a lot more specific. They usually are. And we live in Florida. So is it adequate insurance to not have insurance in the event of a hurricane? So a lot of things that need to be considered. A lot of it has to be on a case-by-case basis. As far as associations having issues, a lot of times it's monetary. Sometimes it's that they are not able to obtain the necessary insurance because of issues in their condominium. Maybe there were certain contingencies or requirements that the carrier is placing on the condominium to upgrade certain equipment before they will agree to insure. And I'm seeing a lot of that where associations are panicking because they don't qualify and they're not really sure what to do next or what their liability. And directors are calling and they're like, well, am I responsible? Do I need to pay it out of pocket? Can we even get it? I mean, there's a lot going on, not to create more questions, but ultimately, the planning really helps. You need to take a look at when your premium is due, when your board member is going to approve the budget. You need to work with a competent management company. You need to have, someone like Castle there that's going to know when your renewals are, that's going to have a direct line to your insurance agent so that everyone can work together as a team so that you can bring in your general counsel to determine what is necessary versus what is recommended. Everyone can be on the same page. There's so many moving parts. And I think I just spoke for way too long, so.
No, can I hop on for
Dr.
1 second
Jerry.
before, because I know that sometimes there's, attention spans are an ebb and flow in these things. And while we have everybody's real quick, just to hop on, document everything that you do on property. I mean, that's probably my biggest tip. When you're talking about having options and, some of the conversations we have beforehand, 6 months before renewal are not very pleasant because we're saying, hey, we're giving you homework. I mean, please, to management, to the board, get us copies of these inspections. Show us the work that you did. If you've had the elevator inspected recently, if you've done whatever you've done is a positive, because one thing you should know, carriers assume the worst. In the absence of information, carriers assume the worst. It is very rare for any type of report or information or inspection to hurt you, as opposed to if you didn't provide it. Maybe somebody would let you bind coverage in the absence of an inspection, but they'd require it, and if you didn't provide it, they'd cancel you. And then if they would have provided the inspection, they'd cancel you. It's not going to hurt you. I really recommend documenting it, and having that organization is going to make sure that you're eligible for as many carriers as possible. The best thing you want is choice. You do not want to be slammed at the last second, say you have one option, sign this, or you don't have insurance. To maximize choice, to make you eligible for as many carriers, organizing that information is key, and document what you've done, show your work. I really couldn't recommend that more highly.
Yeah, Ben, also, sorry, Alessandra. Ben, also, sometimes I get associations that reach out and they want to know how far out they should be bidding the insurance when they are looking to make a change. How does that process work? And then what is the agent of record? What does that mean to an association? How does that impact the carrier?
Well, the agent of record is kind of the fault of how the state has set up the process. And to be frank, it's unfriendly towards both agents and towards the consumer, who is everybody on this call. It does not make it easy whatsoever to shop your insurance. We have nothing to do with that. We like to be able to take a look at other people's stuff easier too, trust me. However, it also right now in this market, I do recommend against looking at it with a bidding mentality. For most associations on this call, I was talking about creating competition. But somebody can only do that if they have really the entire marketplace. And, it's tough to put a number on how many carriers there are. I hear there's 3, I hear 8. There's really a higher amount that people think, but most of them would only take a small part of it. I'll take a higher level of the wind. Some of you on this call have these towers of multiple carriers, layers, et cetera. So really, it takes having the entire insurance marketplace. Go with somebody who you trust, who's telling you good information. And it's very tough to project in this market here, that far accurately before renewal. So I'd say look at somebody's plan, and the more that they ask of you information wise, the better, because our job is to depict you in the best light possible. And if they're not trying to get information, that should be a red flag.
Can I ask you a question? Ben, from the questions that are coming in, there's a few questions about negotiating commission rates and the value of engaging with different brokers. Can you address that real quick?
Well, from what I understand, I'm only saying that because I'm not a lawyer, but I understand it pretty well. Rebating is illegal, and so anybody who says, "Okay, we're going to cut commission to get you here," I mean, that's a problem. Having said that, folks should know. I mean, it's not as if it's just a proportional increase in this market. We are powerless relative to the carriers. The carriers, there are situations in which commissions are higher when the carriers are competing for business in a way. It's kind of a soft incentive. Not that they say it's higher for this one, but the rates might be. Over time, agents' commission has gone down as the market's gone up because carriers are becoming a utility. There's no selection really. It's kind of take it or leave it. So they're not really having to incentivize placing business with them. So anything specific towards an individual account is, in my understanding, very much against the rules. And anybody who offers that, I think that's a bit of a red flag. We're going to try to get the premium down overall and try to win the business that way. The commission is overall a small part of the deal. If you're trying to win it that way, I question certain things.
I have a question here that was submitted by Stan, and this might be a better one for Alessandra, but you both can obviously comment. Why should my association take workman's comp? We have no employees and the management company requires vendors to have it.
Why should my association take workman's comp? Is that what you said?
Yep.
And why are the insurance companies requiring that vendors have it?
They said they have no employees, but the management company requires vendors to have it.
You mind if I take this one? Because
go for it. Yeah.
The policy is probably $500 or $600, and it's called an if any workers' comp policy. So a lot of folks who go on property, look, it's very important. And one reason we have a good working relationship with Castle is that they keep vendors' certificates, for example. showing that. And if a vendor approves a certificate, if somebody's going on to do landscaping, they have a certificate and it shows that it's active, but it lapsed. The obligation is not on Castle to go hunting down to the end of the earth to make sure it's a valid policy. If they deceive you, here's an if any policy. Or if you have somebody that's a smaller outlet, they're exempt from their own workers' comp, they get injured, that would step into cover. So you're talking about something that's $500 or $600 that could potentially save an exposure. I'm not saying the condo is going to be the first one that they go after in that situation, but you're on the list, and we highly recommend people have it.
Ben, sorry.
Oh, go ahead, Millie.
Sure. I had another question from the Q&A. So we all know that windows and roof impact insurance rates, right? Are there other improvements that the association can do that will help your rates?
Those are the biggest ones. One other one, and this is more in terms of eligibility than rates, but it impacts both because the more carriers that will quote you, the better your rate tends to be. And that is for anybody who has buildings that were prior to 1980. Any of those circuit breakers that tend to get flagged. I mean, VetPAC, Zinsco, and there's a couple, there's a couple other Stat Block. There's a couple other names that they go by. Any circuit breakers before the 1980s, those are getting people ruled out from certain carriers, and you don't want to be ruled out. So it doesn't have as big a rate impact. I mean, your roof and impact windows are the biggest, but I would make sure that if you're pre-1980, you get those looked at. That would definitely help out with your rate somehow.
Thank you.
Okay. And then I would add on that you need to make sure that you're complying with all the municipal and state regulations and all the recent change in statutes, because if you have a pending violation for failure to go through your necessary SIRS and MERS or inspections and all of that, and let's say you're in Broward or Dade County and you haven't gone through and you haven't filed and the city's coming after you, you're going to have a harder time getting insurance. I'm seeing a lot of clients that 7 days before renewal, they get contingencies on their policies that is just virtually impossible to meet, and they end up without insurance. And it's not anyone's fault, because like Ben said, you can only bid so far ahead, right? You can only get a response when you're close to the renewal. So if you have no idea what's coming as a contingency because the property hasn't really been maintained or you have pending violations, it's going to be really hard to cure that overnight.
Absolutely.
We are here in sorry, Millie, we are here in October. So October means budget season here in the property management world. And most Castle properties, I will say, have our budgets already done or almost done at this point. But in case yours isn't, I have a question here. And I guess, Ben, you could probably answer this one. How much should they increase or plan to increase their insurance for 24 and, in their budget line items?
So I'm going to say this is a separate answer to what I would bet on if I was in Las Vegas, because I think that it'll probably be better than expectations. I think it'd be irresponsible not to budget for 30% because we just don't know for sure where the market's going to be. It'd be more of an individual conversation, but by and large, I think that'd be the safe thing to do. And then hopefully you have some found money when the renewal comes in better.
Okay. And if the association has a public a restaurant that is also used by the public, does that affect the insurance rates?
Yes, absolutely. I mean, you're talking about higher foot traffic. Theoretically, there's a fire hazard as well, but really that's a liability exposure, foot traffic if they're serving alcohol, but it shouldn't be overwhelming.
There's a question that I wanted to answer about impact windows and shutters, and this is definitely something, if you're an association and you're being told by your carrier that you need to have impact window installed, or that the shutters need to be up to code or whatever, or you need to remove everything and now you want to require to do concrete restoration, now you want to require that the new windows that are installed are impact windows. It all really depends on what your governing documents specifically provided as to who's responsible for the windows. This was a big deal with the legislative changes as to reserves, because some governing documents require that the association maintain the windows, and others put the burden on the unit owner. So there is a statute, and I'm going to refer you guys to 718-113, and it deals with, in subsection 5, with hurricane shutters and impact windows. And essentially, even if the owners are responsible for the windows, the association can undertake that responsibility by by undertaking a unit owner vote to do so and do it on behalf of all the owners, or it can amend their governing documents and amend and require that owners update or install certain up to code hurricane protection by a certain date. So it is something that you need to talk to your counsel and kind of strategize based on your documents and the statutes, how to best attack it, because it's not something that's done overnight. And if you don't have that in place, if it's not now, possibly next year's renewal cycle, that's going to become an issue. I mean, it is necessary to look at for purposes of insurance, whether or not you have proper hurricane protection.
I also wanted to ask Ben about flood insurance. I know Alessandra touched on this a little earlier in the conversation, and I know I had a few associations with Castle that were able to not have flood insurance because of a rezoning. Can you talk a little bit about that?
Sure. So the flood insurance zones and rates are totally determined by FEMA. There is private market flood insurance if you're not in a flood zone. But if you're in a flood zone, it's FEMA, it's the federal government. And like many things from the federal government, there's no real rhyme or reason. People we've seen taken out of flood zones, it's not necessarily apparent why. However, for somebody that's west of 95 to be paying $90K in flood insurance seems crazy. And there are some cases in which it does make sense. The thing that makes it a no-brainer is that typically the engineers, there's something that has to be executed called a LOMA, a letter of map adjustment or amendment, letter of map amendment, I believe, but a LOMA either way. And it's very easy to have that run by an engineer. Your agent can have that done, who will basically say, here's the price to get the LOMA. And it can be projected because FEMA publishes their maps a couple months out. And so it won't really cost you anything if it doesn't help you. And frankly, there's no reason not to do it. There are people who are concerned sometimes because they're moved out of a flood zone, but they do seem susceptible. That's a decision to make. The ironic part is when you're moved out of a flood zone, the FEMA pricing then becomes very high. And so it's tougher to buy flood insurance when you're put out of a flood zone because FEMA is so cheap. So be careful what you wish for, because if you might want it back, be careful about getting zoned out. But it's very easy for your agent to check if that's an option for you.
Ben, while you're on the flood topic, units that are maybe on the 4th floor or higher, 5th floor higher, and high rises, do they still need flood insurance? If so, why? Is it the same type of policy? What are the differences as being more of a bottom floor unit?
You're talking about as homeowners insurance?
Mm-hmm.
The reason you may need flood insurance, and I've heard, and I'm not a homeowner's agent, to be clear, it is a different license, but from what I've seen and heard, and I've never experienced it personally, but is that you can add flood as an option for assessment purposes, because what you're concerned about if you're on the 4th floor is that the building's foundation, the building will be damaged beyond repair. And so the building will be replaced. You'll be assessed as a unit owner. So the key is making sure that your unit owner assessment coverage, which every policy has, your HO6, make sure that it includes flood. If not, you may need either a rider or a flood specific policy for that, because you're obviously not worried about your interior, but there's a lot of assessment exposure.
Alessandra, I know too, with your firm, obviously you're a legal counsel, you're not an insurance agent, but you do have some specialty in your office that focuses directly with insurance. Do you want to talk a little bit about your team there and what types of obstacles they help with?
Sure. So as general counsel, a lot of times we stay involved with insurance claims, whether it be property damage or D&O policies. And one of our partners actually is appointed by the carrier to represent the associations when they get sued. So a lot of times when we're general counsel, either us or the client will request to the carrier to have us represent them, and we'll take the lower hourly rate that the carrier pays their insurance counsel in order to continue representing the association, because we've already been familiar with the issue or maybe already handled it, or depending on the case. It's not always that the carrier will agree to that. It depends on the policies. But it's a benefit because we're familiar with the adjusters and the insurance side of it, but we also act as general counsel. And sometimes even when we don't come in to act as insurance counsel, it's really helpful to have general counsel present. Sometimes insurance counsel under reservation of rights will drop out mid litigation when they discover something that allows them to exclude coverage from the policy. And then you're kind of stuck without counsel mid lawsuit. So it's really helpful to have general counsel involved just because of the expertise. And sometimes it's not a simple slip and fall. You're dealing with various associations, different properties. So that is something that we do.
Wonderful. And Alessandra, a question came in regarding self-insurance insurance. I know we talked a little bit about this before, so maybe you want to address this?
Yeah, so in a nutshell, I don't recommend it. We don't recommend it. It's extremely complicated. The reasons for that is that while the statute allows it, it's very risky and it's a very complex, time-consuming, and costly application process with the Florida Department of Insurance. You need a certificate of approval from the Department of Insurance before the self-insurance fund can be initiated. So you do have to follow all these statutory requirements. You need at least 50 units, apartments in total in order to do that. You want to have different groups, then you want to consider geographic diverse areas. At the end of the day, even if you do this, you may have issues with lenders and mortgages and purchases of units where there is self-insurance. Even if you do everything correctly, they just may, Fannie Mae, Freddie Mac may just decide, or any other lender may decide they're not willing to take the risk of the self-insurance. There's also concerns of breach of fiduciary duty of the board members who, again, volunteers. And there's a cost for a third-party administrator to the self-insurance fund or the trust. So a lot of different reasons. It's very complicated and we don't recommend it. And it ends up, it's an analysis that we've gone through with numerous associations at this point. And after going through the procedure and starting the process, ultimately they find that, okay, just kidding. This is way more complicated and harder and more expensive in the long run than we imagined.
Okay, thank you. Also, Alessandra, so a couple of our associations, or not a couple, quite a few, because the increase was so significant, they had to pass a special assessment, while others did a finance agreement. Do you want to talk about those two, things, the difference, and how does that, like, is there some kind of a stipulation regarding finance agreements?
Right. So you want to be really careful when you enter into finance agreements. Just make sure you have your attorney involved and you're looking if there are any restrictions in your governing documents that would require membership approval. It is very common because a lot of times you need to pay up the policy premium upfront, and that costs a lot of money for large high rises. So you essentially want to do it as a payment plan. You want to look to see what is being used as collateral in the event of that the association can't pay, or if there is a claim before the end of the payment plan, and really understand what you're signing. A lot of times, even though it's standard, a lot of associations sign without really understanding. So you need to look at these provisions. You need to consider that. I mean, a lot of times you can, if you know that that's an expense that the association incurs yearly, in order to avoid the interest, maybe you take that into consideration into your budget for the following year. I mean, there are ways to account for it, and it does take planning. And that's what we would recommend doing. And definitely just consult with your agent and your management and your attorney as you're trying to figure out the best route to move forward.
Is there, does the association or the membership have to vote on that, or is that something that the board can just sign off on? It's a finance agreement, so.
Right. So generally the board has the authority, but it depends on the specific governing documents. If there are restrictions on borrowing, if there's restrictions depending what the collateral is going to be. So we have to be very careful. It's something to be cautious of, and you definitely want to plan ahead because you want to have enough funds to be able to make the payments or the authority to enter into payment plans and otherwise without being in violation, because at the end of the day, the board members, they have a fiduciary duty. They're looking to do what's right for the association. They don't have to do the correct thing, but they have to utilize their business judgment and rely on the advice of professionals. And that's why we're here. And that's why I applaud everyone that's listening, because at least you're trying to learn and you're trying to seek the best advice possible.
Absolutely.
We're about at the midway point, and I want to thank again everyone for posting and submitting questions. We have a lot of them. We're rapid fire going through as many as we can, so we'll keep putting them in there, and we'll see if we can get to as many as possible. Ben, there's always, or I always see things in the news about insurance carriers leaving Florida, and we always seem to go that way. But when do they come back our way? Are we going to get any others? Do you think you can look in a crystal ball? Would you predict any others come back to Florida?
We don't have to really look at one because there are carriers getting ready to enter. And just like how if you had an IRMA claim back in 2017, you were the first one to have your rates go up. In this case, you know, the pristine buildings, the newer you're building, you know, kind of further away from the beach, there's certain things about it, you'll be the first to benefit. But I mean, it's simple market factors again. If at a certain point carriers can make a profit charging you 3 times the premium you were paying 5 years ago, they're going to do it. And we are seeing carriers enter. There is some holdup during hurricane season. Folks don't want to start. We still have some time in hurricane season to go. But Idalia, frankly, was a minor issue for insurance carriers. If you could pick a route for a hurricane to strike Florida, that would minimize the impact, considering that a hurricane had struck Florida, it would be the route that Idalia took. And you're going to start to see some carriers enter. And of course, when those carriers enter, even if they're limited to just the nicest property, so to say, no offense to anybody else, if they're just limited to those, at least it frees up capacity for everybody else, because those properties tend to have very high insured values. So there's room for others to insure some other properties, and it tends to have a cascading effect, just like it does in the bad market. And we're pretty close to that.
Ben, I know you are one of the more thorough insurance agents down in the area, and obviously you and I have worked together in the past when I used to manage a property. But tell me a little bit about when you get that first meeting with a new prospective association. What are some of the steps that you take to learn about the association and go through the process of getting a competitive quote?
To be frank, I think that there's value in exchanging information before the first meeting. Nobody wants to waste anybody's time in this market, and you know, we're not. Insurance is a big issue for boards, but not the only one. And most of you have jobs aside from this as well. So nobody's trying to waste anybody's time. I would say exchanging information beforehand, at the very least, and anybody's lying if they say they need to see your premiums. Okay, I mean, look, it's always helpful. It's good to know. I could tell you, hey, you're paying too high or whatever. But really, if you have the rest of the information, you can black out the premiums, white them out. Appraisals, your policies, and the reason your policies are important is to know your levels of coverage, and to, nobody wants to come in and reduce your coverage. And then certain other information, loss runs, and then kind of like I mentioned earlier, anything you have, inspections, wind mitigations, proof of work, the signed contract for future work, showing that you're addressing this. This is unaddressed, but we're addressing it. Whatever amount that you can get before the meetings, that way when we meet or when you meet with an agent, there can actually be legitimate feedback, as opposed to kind of using that to start the process. And really, there'll be certain points where people should be able to give you a pretty good estimate based on that information. And we know that and we'll specify, hey, if you haven't given us loss information, this is dependent on there not being massive losses. But it will enable the conversation to be productive, useful, and really actionable at that point. If there is a conversation before the actual meeting, it's not a meeting about a meeting. It's just trying to make that time very valuable for both ends.
Yeah.
Ben, you mentioned.
Oh, sorry, real quick. I want to ask you the same question. Obviously, not insurance related, but when you have those initial meetings with potential new boards, when you talk a little bit about some of those early preliminary questions, what's your process for the same type of question?
And we're talking as far as how to plan ahead for insurance. Sorry, I was listening to the questions and trying to type answers, so I got distracted a little bit.
Yeah, no worries. No, it certainly could be, or just in general, when you're meeting about a potential you're promoting your firm to a potential new association about some of the advantages working with you. It could be in addition to insurance. What are some of the goals and initial topics you talk about with prospective boards?
Well, I think that going back to really the basics, board members are volunteers. They're not expected to know everything, and the laws are constantly changing to the point that we as professionals are constantly struggling to keep up. So I think that what the approach I take as general counsel is board members are volunteers. I'm a service provider. And at the end of the day, I'm available at their request. So I can be as involved in assisting them through the process and hold their hand through the process, or I could be available to consult on an as needed basis. Obviously, there are certain things that require more hands-on and more attorney involvement. And my goal is really to set the association up so that I don't need to be speaking with them on the day-to-day. I want management to do the day-to-day. I want you guys to have your policies in place. I want you to know when your insurance comes due so that you're ready to include that and to consider what's going on in the market, so that when you do your budget, you're aware of that, so that you have your committees in place, you have your procedures for collections, you understand that your association, at the end of the day, it's a business, right? So you need money coming in order to pay pay the insurance premium. So if you're not doing the collection aspect of it, how are you going to be able to then comply with your obligations of having insurance and having vendors and providing amenities? So it's all very connected. And I think it's really important for board members to remember that it's, you guys are essentially running a whole condominium with the assistance of the professionals. And there are so many issues that come out of this. I mean, things that I would never think I would be doing as an association attorney, from technical matters and electrical charging stations to dog poop and DNA. And, I mean, it really is, it's a law and insurance. And we were talking in our dry run, it's a topic that I usually fringe at. I don't think I've ever had a good experience. I know that there's a lot of questions on the chat right now about individuals that have not been able to get insurance on their homes and on their units. I never had a claim. And earlier this year, my insurance carrier left the state for my house in an HOA. And so went to my agent, and the only carrier that would pick up is Citizens. And so Citizens got, paid for Citizens. And then 2 weeks later, they dropped me for no reason. And then the carrier had to go in, and then you have to show pictures of your bathroom and your kitchen. And this is happening everywhere. It's not just condos. It's not just HOAs. It's not just, for the big high rises, it's homes, it's people without any claims. They're trying to reduce their risk. They're evaluating, they're swamped, to be honest. So there's a lot of miscommunication things. Sometimes I get letters in the mail, sometimes I don't. My clients are experiencing the same things. They're having a hard time if they don't have good agents, they have a hard time communicating with Citizens to find out what they're even requiring to get their policy reinstated. So, we're here as general counsel to assist in anything that may come up, but I'm not an insurance agent and I'm not management. So I'm going to defer to you guys when it comes to that. And I'm going to assist you from the legal end. And really to work with the professionals is my best advice when it comes to boards, and how to address some really uneasy situations that we're all facing right now.
Yeah, your property manager, whether it's with Castle, another company, or you're self-managed, and I know we have some property managers on this Zoom as well, and they'll tell you themselves, it's important that they get all the facts for the board as much as they can, by reaching out to the council, by reaching out to the association's insurance agent, right? They're not experts on those either, and we want to get best in class. We want to work with the best possible association vendors to get the data for the board, so the board can have the right information to make decisions and not just go willy-nilly and just make things up off the top of our head. So to your point, it's important that you have good people around you, and that's why we like to have these webinars, so we can give some of these tips. Millie, I think you had a question you wanted to ask.
Yeah, well, both Ben and Alessandra touched on this. So you were talking about the lost runs and the claims. So Ben, can you talk about a little bit, like how long does a claim affect the association?
Less than people are often told. Carriers will either ask for 3 or 5 years lost run. So the max is 5 years. The max is 5 years. But this is a prime example of how the role of the agent is to lobby on the association's behalf. I've seen this example play out a couple of times where you've had towers. So you're talking about one roof, and in most cases, it was a serious water claim, a very serious large claim, et cetera. And the roof was replaced within the next 2 years, and the claim was closed out in that same time frame. Now, at that point, you have a choice. You can let it affect you for 5 years that you have the claim, or the agent can do what they're supposed to do and tell the story and say, hey, this is the result. Here's the new roof that came along with this. This claim will not reoccur. That was the original roof. This is a new roof. I'm not saying it could become a positive, but you wipe out the benefit of it. Alessandro is very right about Citizens, and that's the case for commercial lines as well. They did not scale up like they needed to. They've very quickly become the third largest insurance carrier in the country again. So they're understaffed. However, in each of these deals, we're not talking about just homeowners insurance. I'm not saying it's not important, but as far as the carriers are concerned, the amount of premium we're talking about, we all know how big that number is. The amount of insurance that they're offering, tens of millions of dollars in appraised value. This is not a simple computer transaction where they spit out a quote. There are conversations that are had. And if somebody's not making the argument that the repairs in terms of a new roof from a claim outweigh the damage of the claim, and that's one example. But there are many, many others. And so claims should not be affecting you the entire 5 years. And if there's something you can't avoid, then it's the agent's job to get you a carrier that will accept 3 years of loss runs and not 5, to where it's not impacted. And one of the biggest problems we see, and it sounds like a simple thing, but you need to know, the agent needs to know, and their staff needs to know which carriers take 5, which carriers take 3. There's never a benefit to sending 5 if it's only 3. There's why over disclosed. And so it's really about presenting you in the best possible light to make those go away as quickly as possible.
I have a question that was asked of me, but I want to ask it of Ben to kind of explain, and I'll kind of answer it too. So there's a lot of confusion as to whether a unit owner or homeowner policy comes into place, or whether it's the HOA or condo policy that covers. And I know that, and this is my understanding of it, and then Ben, correct me if I'm wrong, and then management, feel free to chime in. But back in the statute before 2010 required that unit owners maintain insurance on their specific unit. It was changed, and there was a lot of legislative changes because it put the burden on the association to verify each individual owner's policies. Now that requirement is not in the statute. It may be in your specific association's declaration, and you need to consider if there is a requirement and the association is not enforcing it, what is the liability to the association for not enforcing that each owner have an HO6 policy. Now, when the policy for the individual unit, let's say in a condo, versus the policy that the association gets, there may be some overlap. By statute, the association is required to have adequate policy covering the exterior of the building, and I'll let Ben go into all those details, but sometimes there's also damage to the inside of the unit that technically would be covered under the HO6, but if it was caused by an incident that's covered by an act of God that the association may cover, then it may be a claim under the association's policy. There's a lot of overlap. It's not, in my understanding, a very clear line, and it depends on the policies, it depends on the damage and the governing documents. But I know there's some confusion. And then, Ben, when you address this, if you can also talk about the different policies, because I saw some questions in the chat about all the different types of insurance policies, the D&O, the theft, the umbrella, and what is required and recommended. Because as an attorney, I tell my clients, yes, you absolutely should have D&O coverage because you're a volunteer, and if you get sued personally, you want to have coverage. You want to have the umbrella, you want to have all of that. But I always defer to the agent, because at the end of the day, that you're the insurance agent. So what are your thoughts on that?
If any board member doesn't want D&O coverage, get off this call and re-enroll in kindergarten. I don't know why anybody would do that. You have massive exposure to yourself personally. That'd be insane. I've gotten asked that question a couple of times. In all seriousness, though, about the other policies, let's talk about first where the line is drawn. That's set by the statutes. Actually, it gets even more confusing, because then you're going to have, okay, well, what's about maintenance, routine maintenance versus in the event of a loss. Good example is a window there, boring but good, because if there's a crack in it that just appears or something like that, or if you just want to replace it, unit owner wants to replace it with wants to upgrade to impact, that's on them. But if during a hurricane a projectile is thrown through it, then it's the association. In general, a good way to look at it, anybody who's watching this from their unit, you're looking around, what you see is on you. The carpet, the flooring, drywall, the cabinetry, what you see is generally on you in the event of a loss, with the exception of the other policies. And usually, it sometimes does involve an act of God if there's negligence involved, but oftentimes it just involves, when something happens and a unit owner from 2 floors up, might be running they might be out of town. There could be a million reasons why the association has some fault. So that liability, the important thing to understand about a liability policy, and same for directors and officers, which, to be clear, before I insult anybody further about it, it is a policy that protects you for the liability as you're a director. Decisions you make that could result in an assessment, people could be very upset with you about that. Now, something like general liability, directors and officers, that never pays you. A property policy will pay you. You might go and you might pay for remediation. You may pay a roofer. You might pay certain people, and the property policy will cut you a check. General liability, directors and officers, they pay people who sues you, sometimes to their detriment. That's a big frustration I hear from a lot of people, is that the carrier is a little bit too quick to pay others. I don't know if we want to necessarily get into that rabbit hole. However, with a GL, general liability, directors and officers, and I want everybody to consider one thing, because if you're concerned about personal exposure, there's a little difference here. People sometimes say, okay, umbrella and excess liability, it's kind of interchangeable. They're synonyms. That's not quite true. Umbrella tends to cover over directors and officers. So let's say a $5 million umbrella. Directors and officers policy is almost always 1 million. But you're talking about something you're sharing with your whole board, and who knows what the assessment liability is. I would try to make sure that your umbrella policy covers that, because otherwise you have excess over the general liability, fine, but you all are volunteers taking a lot of time out of your day. I would be very nervous about assuming any more risk, and so I would make sure that umbrella sits over that directors and officers for yourself.
Being that we live here in Florida, and many of us in South Florida, a lot of the towers and along the beach and the HOAs are all built at the same time, around the same time. So a lot of them are now aging at the same time. So Ben, as these associations slowly but surely improve things at their buildings or clubhouses, whether it's a new roof, new windows, all those types of things, so should they be updating you throughout the year, even if their policy isn't up, to let you know and confirm that these things have been taken care of? And does that help adjust their policy as they're moving forward?
1,000% it does. Whether it's noticeable is tough to say. Obviously, if you go and you re-roof suddenly, or you replace all the windows with impact, or you do concrete restoration of the whole building, there'll be an impact that you can see. Versus if you're doing it incrementally, sometimes by the time you finish the project, you need to start it all over again. However, that is very key, and it does help. And there is a factor that's tough to make quantitative, where it shows that the board is on top of things. That things are being improved. It's less likely there's something catastrophic that has been unseen with all these folks that have been going through making improvements throughout the building. It helps a ton. It should never bother your agent for you to send those. Your managers are organized about that stuff. We are too on the agent side, because we basically send a data trove. And there is just something that says, well, here's all the work that they've been doing. I highly recommend sending that forward. And just, I'm not an attorney, obviously, but the more that you do, the less the liability on you as a board for certain catastrophes that might occur. You've done everything you could to avoid it if you've been doing that work throughout the year.
In relating to that same question, along the same lines, Ben, there was a question on the chat. What if you're mid through your roof project and your insurance renewal comes up? Does that help that you're not haven't completed the project yet, but you're working on it?
So it always helps to be doing a roof replacement, because no matter what, some of it will be some of the policy term will be with a new roof. However, it kind of depends on timing. I would be very, very nervous about doing let's put it this way: if you're doing a roofing project during hurricane season, you'd almost be wiser to consider what's called a builder's risk policy, because you're talking about some exposure there that is in addition to the normal exposure from the construction. And you don't want to have a situation where the building's destroyed because of something the contractor may have done wrong, or just it was a very strong storm, but construction made the loss possible. That's excluded on property policies. And so the timing of it's very, very important. Typically there'll be some benefit one way or another. But if you time it to be not in hurricane season, that I would highly recommend it. Like, ideally, you'd start it in December, be done in May. You have a new roof by the time hurricane season starts. That would rate out pretty well.
And silicone, I know you're not a roofer, Ben, but silicone roofs versus an actual full roof replacement, I'm imagining that those are two different things when it comes to insurance coverages.
Sadly, it doesn't do nothing, but it doesn't count as a roof replacement. And in that case, that is one area where the year of roof replacement is just kind of a dividing line. You're either eligible or you're not, and it does not count as a roof replacement, unfortunately.
All right, guys, we have about 10 minutes left. So, and I know, Alessandra, you're going through the questions too, but you want to make sure we get to as many as possible. And again, just thank you to everybody for these questions. They've been very, very good. You've made our jobs easier, not having to ask questions. I'm able to read most of them. So thank you for that. But yeah, I'm Alessandra, is there anything that you've seen there that you want to cover before we run out of time?
There's a couple questions on here, and I see it over and over. And one is asking, can the association require the owners to install impact windows and doors?
No. The association can pass an amendment in their declaration that will require it, or it can undertake the project by virtue of a vote. There's certain strategies, or if they're going to update it, they have to comply with certain specifications that are adopted by the association for hurricane impact windows and doors. But you can't just out of nowhere at a board meeting all of a sudden require it. A lot of boards don't understand that, because the insurance carriers are coming back and saying you need to update it. So they think that they can just require it of their owners, but it's a little bit more of a complicated process to get that done. And one of the questions that I answered, I think twice, is if you can verify insurance for a unit owner, how can the association verify that a unit owner has insurance? And if the declaration doesn't require it, then the association can't demand it. So ultimately, the owner is responsible, whether they have insurance or not. But there's really no obligation or legal requirement that the association can place on the owner to provide a copy of it if it's not required by the declaration.
Hey, Ben, if these boards are improving their buildings, right? They're putting new roofs, they're painting, they're putting new windows. That's probably increasing the value of the building in itself. Does the value going up mean the premium is going to go up as well?
Yes, you're buying more insurance. Now we have to be clear. There are factors here that are all unrelated to each other, because you have a roof replacement, which improves you as a risk. Then you have an appraisal, which increases your value. Your rate goes down, but you're insuring more. Your premium might level out. And so it's very important to understand that not any one of these factors is dominant. They're all playing against each other. The appraisal thing, however, that's not really going to, the carrier will very rarely, Citizens might, but other carriers will very rarely enforce a higher value because that happens. Instead, they'd be more likely to wait for when the statutes require you to get an appraisal every 36 months, and you would endorse on at that point. So because the statutes require that, carriers are not really nitpicky about, okay, you've done this in the meantime, we think you should be insured for higher. But it's important to remember that all those factors can balance out over time. And that's been kind of the silent killer recently has been the appraisal. And if you look and you see the last appraisal you've got has been 3 years or more, that's something that should be a little bit of a red flag, because then you'll be looking at having to factor that in to your budget planning, because you're basically buying, however much more insurance, the appraisal goes up. If it goes up 10%, your limit goes up 10%.
Is there anything, this is for both of you, is there anything boards should not do as opposed to, trying to, because everyone has a strategy of things that they should do to try to save money when it comes to insurance. From a legal perspective and an insurance perspective, are there things that you've seen boards do that maybe they shouldn't do because it doesn't help?
To bring in a third agent.
How much time do you have?
Yeah, I would just say, I think I really think the bidding process is tough, but two's a company, three's a crowd. Is that what people say? There is absolutely no. I'm not going to tell you not to bring in another agent. I mean, that'd be bad for me if any of you want to work for me. But do not bring in three. Do not bring in three. You will get an absolutely terrible result. And frankly, you'll probably end up uninsured because they might not have any. None of them might have the capacity to give you the markets you need. So do not be tempted to just say, "Hey, come go give me a price. I'm giving you these carriers." Wait till the market softens for that.
I'd say if you take anything from this, just remember that as an association, you need to plan. We all know that it's an unstable marketplace, that we're going through some crazy times. The real estate market is up and down. This is a result of, unfortunately, the Champlain Towers, and then ultimately the legislative updates. The real estate market is getting affected by it. There are laws impacting our communities that are related and not related to this that are also impacting insurance. I mean, there's so many variables. So I think the best thing that you can do as a board member and as an owner in your community is make sure that the association is planning in advance, that you have contingencies in your budget, that the owners understand what's going on. Communication is key. If all of a sudden you double your budget and you're not telling everyone that your insurance has doubled, and that's the reason, you're going to have recalls and takeovers and civil wars inside your communities when it could have been reasonably explained by virtue of bringing your insurance agent to your meeting to explain to the owners what's really going on. And a lot of vendors, Ben, I'm assuming you would do that. I know that, with attorneys, a lot of times it helps for us to come into your community and explain in layman's terms what is going on, because sometimes the boards can't put it in a way that the owners feel like they're getting enough information to feel comfortable supporting the board's decisions. And here it's unprecedented times. We've gone through COVID and the pandemic, and now all these crises and change in laws. There's a lot of times there's no right answers, but you need to have a good team backing you up as a board so that you have the resources available. And
right. Sorry, go ahead.
No.
I know, we never mind coming to the board meetings. We never mind taking some heat off you as board members, but it also we found that sunshine is a great disinfectant here. And even afterwards, if there's a situation, sometimes there's a policy bound that might be cheaper. There might be some catches. Hey, we might have to do. There might be an inspection. There might be something. When that comes up, it's very helpful for that discussion to have been made out in the open for everybody, because there's pros and cons either way. If you pick a more expensive policy that's unlikely to have side effects, so to say, and everybody's fees go up or there's an assessment. So we spend a lot of our time going to board meetings. Tonight, that's part of our job, and that should be. I encourage you to let the insurance agent take the heat, because we can also answer things in a way that show people, hey, here are the pros and cons of each option, and we're kind of all in this together. But that's the big reason. The board meetings are a big reason why we look forward to delivering better news, because those used to be a lot more fun.
Ben, I know we talked about briefly, I think it was yesterday, we talked about like when your policy ends, right? And if you have a policy that it's in hurricane season, it's probably going to be higher. And if somebody has that situation, how can they change their policy to end on a different time, where it's off the season?
So in the past, there were ways to do it by making a longer term policy. That's become tough because most people have done that already. And the thing with doing a shorter term policy, the past few years, if you cancel early, just means you're getting the higher rates early. Why do it? Really, that's something that as the market changes, there are some people we're working on now for an extension to where they're expiring near the end of hurricane season. Sometimes there's an ability to extend into December, January, et cetera, because the carriers don't really care about those months. If you're in Florida, they're concerned about hurricanes. They don't really mind insuring property in Florida in the springtime. And so getting an extension into those months can be very, very helpful, even if it's short term, because you have so many more options when it's not a hurricane season. And all these carriers put these high minimum earned premiums if it's hurricane season, sometimes 85%. To where if you do even one day in hurricane season, if you're there for November 30th, you're locked in for a very long time. And so for maximum flexibility, try to get an extension out of hurricane season, and it'll definitely be even more possible as the market gets better.
Well, I know we are coming to the end of our webinar, and I want to make sure that I put your information on the screen. So I'm going to go ahead and do that. So I don't want to forget that. Let's see.
While she's doing that, Ben, a quick question. I saw actually a few people put in here. It's not directly related to you, I guess, but when a unit owner has their specific policy, insurance policy, do they need to put the name of the association on it as well? So if for some reason that person decided to cancel their own insurance, we'll know why you would do that. But if they did, would the association know about it, or would they find out about it?
Because of what Alessandro was talking about, there's not really a mechanism that the state gives associations to enforce that. And so there's really no reason the association would have to ask for it, unfortunately. I don't think that's necessary, but I really recommend everybody, if there's one thing for personal insurance, I recommend look at your loss assessment coverage. Every policy, every HSX policy, it must have at least $1,000. But if there's a loss and there's a high deductible, if you have a policy 5-10% deductible sometimes for hurricanes, the association is part of that. Your part of that can be covered. You can boost that amount that you're covered for if that happens for relatively cheap. I highly encourage people to do it. I can't help you with that myself, but talk to your homeowner's agent about that.
Gotcha.
There was one other question that I'm not sure that we know the answer to, but if Citizens drops you or won't take you because you don't meet the requirements, what do you do? And my suggested answer is you meet those requirements so that they will pick you up again, because I'm not sure what the other answer is.
The best option, but that's the best answer. But really, you'd have to take it. I'm trying to be quick for this, but basically, you'd have to take a lower limit at that point. It would be very tough to insure to the full value. You'd have to take whatever carrier would offer you $5 million of coverage or something like that, and go on with that until you can meet Citizens qualifications.
Right.
Well, as we get ready to wrap up here, we have about a minute left. If you each want to give your final final speech here, just about a little overview and again your contact information and what you guys can do to try to help everybody. Alessandra, go first. Ladies first.
Sure. Okay, so I don't know, we're trying to get the contact info on there, but
yeah, I'm working on it.
Feel free to reach out to us and get on our website. We do a lot of free education, and I'm a big believer on educating board members. And I'm also the co-chair of the education initiative between the Florida Bar and the division, the DVPR. So we do a lot of unit owner education. So get on our listserv if you're not on there. Shoot us an email so that you get more free education. This is a very complicated topic. So unfortunately, I don't know that anyone's going to walk out of here feeling better than they did before, because I don't know that we have any final answers. It's a moving issue, and we're trying to address it as it goes. So keep that in mind and keep checking in and getting more information, because it's a changing landscape as well. And thank you again to Castle and to Ben for the opportunity to be here and to educate.
Yeah, thanks everybody. Really appreciate it. Thanks for spending your lunch hour with us. There's a dot in between the names in my email. It's tough to see, but if you go on Castle's LinkedIn, they tagged me in the event app. But look, there are better times ahead. Hold on, it's going to be just a little bit more of tough times, but this has run its course, and there are better times ahead. So I look forward to enjoying those times with you all.
Yeah, thank you. Thanks to both of you. Again, we always talk at Castle about being vendor agnostic. We don't partner with or get any benefits if you select a certain vendor over another, but we do work with the best, and Alessandra and Ben and their individual industries are certainly among the best. So you won't be disappointed if you reach out to either one of them. And then, you can always reach out to Millie or myself if you have any questions about anything you saw today or any questions about management. My name is below my face here, but it's the letter J, Esposito@castlegroup.com. So feel free to email me, and I'm happy to help with any questions that you may have.
Yep, thank you both. And also thank you to everyone who attended and who submitted their questions in advance and who participated in the chat. We really appreciate your time.
All right, guys. Thank you very much.
Thanks, everybody.
Appreciate it.
Bye.